Hello everyone, welcome to my presentation. My name is Pinto Didi Muhammad, the author of this research, and the co-author of this research is Mr. Zafri Ananto Husodo. We are from Faculty of Economics and Business, Universitas Indonesia, Jakarta, Indonesia. As you can see on the screen, this research is about Fortune 100 companies' reaction to COVID-19. Is it still immovable? This presentation will be divided into five parts. The first section will be introduction. The second one is about sample construction. The third is research methodology. The fourth will be result and analysis. And the last section is conclusion. Section 1, Introduction. Almost everyone expects returns from every investment decision made. This is no different from investing in stocks in the capital market. Potential investors tend to choose companies that are considered to have good performance and are expected to be able to provide returns in the future. One indicator of the company are good because there is an assessment of a rating from entity that has the capability for it. One of them is from Fortune magazine. Fortune magazine is a multinational business magazine in the US and made an annual list called the Fortune 500, which contains of the 500 largest companies in the US. The Fortune 100 is a subset version of the Fortune 500, which contains its top 100. However, at the beginning of 2020, the world experienced a crisis caused by COVID-19, and this crisis entered into a pandemic level by WHO. COVID-19 is a virus that attacks respiratory system and has a very fast spread. The COVID-19 pandemic that has caught the world's attention has had a major impact on the global economy and countries since the beginning of 2020. According to research conducted by Zhang et al. In 2020, COVID-19 that caused a health crisis became a trigger that led to a financial crisis. Many retail investors get big loss in a short period of time. The risk is also increases substantially. The influence on the economic by COVID-19 also has a negative impact on the stock markets of various countries, as found by Corbett and Zhang in 2020. Regulation and policies made by governments in various countries in dealing with COVID-19 also make financial markets respond to changes in that policy. In the United States of America, the first case of COVID-19 was first announced on January 21st, 2020. Until March 24th, 2021, confirmed cases of COVID-19 have reached 30 million people, and US stock market in March 2020 shows a decrease. Previous research related to the effect of COVID-19 on return has been widely carried out. Ashraf in 2020 in his research stated that the stock market had a negative reaction to the addition of COVID-19 cases. Al-Awadi et al. Also did research about COVID-19 and stock return at the China stock market. The results of the study stated that COVID-19 had a negative and significant effect. However, what about Fortune 100 companies? How will COVID-19 affect the returns from companies that are considered to have a good performance? In this background, the author aims to explore how companies that are considered to have performed well through the Fortune 100 respond to the COVID-19 pandemic. The question of this research is there negative effect of COVID-19 on companies listed in the Fortune 100, and how will COVID-19 affect its volatility? Section 2, Sample Construction. This research is a type of quantitative descriptive research. This research tries to explain how COVID-19 affects the returns of company stocks that are included in the Fortune 100 list in 2020. The research sample was conducted at companies listed on the Fortune 100 in 2020 and with a public status. The existing 90 companies have public status while the other 10 have a private status. So the authors take 90 companies as a sample. The research period is carried out for a year of the COVID period in the US or 250 days of observation starting from the first day the COVID-19 cases was announced in the US. The main source of data in this research are from investing.com and from Coronavirus Research Center, Johns Hopkins University. Section 3, Methodology. This study used panel data regression analysis as a data analysis method. Panel data regression analysis is a regression analysis that combines data from cross-section and data from time series. The advantage of using panel data is that it can provide a wider range of data so that it will provide results of a greater degree of freedom. In addition, by combining data from the cross-section and time series, it can minimize the problems such multicollinearity, heteroscedasticity, and estimation bias. To select effect model, a series of 2 out of 3 tests were used, namely the Chow test, Hausman test, and Lagrange multiplier test. Data processing in this study used a software application called eFuse10. After that, we formulate the equation model for this research as like this. So, the next section, result and analysis. This table shows the descriptive statistics of this research. With 22,500 observations, the highest return in observations is 41.1% and the minimum is negative 34%. COVID-19 variable shows the maximum value from COVID-19 daily cases in the observation is 280,304 people. The next table is showing the correlation between the main variables. None of these variables have higher correlation value than 0.8. It means that these variables do not have correlation issues and not correlating each others. After we did regression, it comes the results like this table. This table shows that in 1 year period of observation, growth in confirmed case have a positive impact to stock return, and this impact have a significant value. Meanwhile, the other main variables also have a significant impact to stocks return. Lag return have a negative impact to stocks return. Abnormal trading volume variable have a positive impact to stocks return. Volatility also has a negative impact to stocks return. Meanwhile, the constant does not have significant value, and the value of R squared is 0.01. Last part, conclusion. For the last section, COVID-19 has a big impact, including the economic impact. Broadly speaking, the economy has experienced a decline due to this COVID-19. However, from this research, we can conclude that the effect of COVID-19 gave the impact differently in this well-regarded company. These companies are showing a positive and a significant reaction to COVID-19. The effect of COVID-19 on volatility is negative. This is inconsistent with previous studies which gave conflicting results. The author considers that these companies can survive and even take advantage of this pandemic. And because of this good performance and management, they may also enter the list of the 100 best companies according to Fortune magazine. But his opinion certainly needs to be studied more deeply for validation. Okay, that is the end. Thank you for your attention. Stay safe and stay healthy.